We need your support. Click the like buttons below. Now onto the video. Welcome to readtheticker.com. Today we're going to look through some charts to see where we are, the status of the trend, we might call it. What we have in front of us is a Dow Jones daily chart going back 1970. But on this chart we have a very important cycle. We have a red cycle here. It's the 900 period daily cycle. It's rounded off to 880 just for fitting. And then we have the 2600 cycle, which is the blue line. So the red line is the 900 and the 2600 line is the blue line. And as you can see, it fits pretty well. 1987, 2002, global financial crisis, COVID. Okay, so where we are now, the cycle suggests we have a expected rally into 2021, which suggests, as you know, look at the swings here. You can see the swings here are quite timely. They're not wide and fat like these ones. So I expect a cycle to rapidly rise into the early part of 2021. Now, if you want fundamentals for that, you could suggest that the stimulus gets through of some sort. Everyone's happy with the election. My guess is that Trump will probably win after all the chaos that may ensue. Obviously things can change, but you can also assume, I suppose, if there's lots of chaos, then the Fed's going to print. So I expect a cycle to run through quite aggressively to 2021. Previous toppings have been pretty generous to the uptrend. There seems to be no real major sell-off. Okay, but we could probably expect a 20% correction after that. So based on general cycle work and the expectation of stimulus, bullish into February, March, and we obviously have to worry about May. For more evidence to back that up, we can go to our Nyc Margin, or the FINRA margin, and it confidently suggests that greed is back. The black line here is the monthly Nyc Margin. Now, important characteristics to note about this: even though it's delayed by a couple of months, you still get a heads up. Here we had a higher high in SP 500, but the margin never climbed, so it was a lower low. Okay, here we had a massive higher high in SP 500, but the margin never accelerated. Okay, so at this time we've got a higher high in SP 500, and the margin, as you can see, has returned to old highs. So you can imagine how this information would be quite useful to the insiders if they knew of this. Okay, we don't get it for 2 months, but you can bet the insiders would get it a lot quicker than we would, probably on the day it's calculated, which is all very good if you're going short. But at the moment, we can say quite confidently, with this big add-on in margin, that the greed is back. People have loaded up with debt, and they're expecting higher highs, which confirms, you know, if the debt's loaded up behind the upward cycle, then you can believe that the cycle is healthy. So it's positive into January, February, March, April. Now, I've always mentioned May as runaway, because you never know what happens in May. But we're going to look at the channels to work out where price can go on the Dow. Channels are very important, everything channels. I'm just going to go back to, if I can find it, there we go, Dow Jones. So here's the channels around the Dow Jones. We've got the channels all the way back to 1837, and you can see the green major lines. So see the solid green lines, those are the major lines on the channels, and the dotted lines are the sublines. This dotted line on this chart is obviously a division of 2, and now we have the more recent channel, which is the red one. Okay, and I would suspect we're gonna tickle this range here, which is getting close to 40,000 in the swing up to in the next 6 months. Now let's have a closer look. Right, so here's the solid green line, but this time the dotted green lines are a division of 1, 2, 3, 4, 6. Now what's interesting about these dotted green lines, if you notice, I always have to remind people this, is that price tends to move between these dotted green lines. Okay, it has done since 1982. As you can see here, the crashing global financial crisis took up 3 green lines. All right, from there to there to there to there. When it accelerated, 1, 2, 3. So I mean, it's 1, 2. So it took a 2 there, paused. It goes up another one, halfway through, and back up to another one. As you can see, the green line movement is quite consistent. So therefore, let's put one next green line that's just under 40,000. Let's just say it's around 38. Now the blue channel suggests we went down to here. From that there, we might overshoot and also join that there. So this area here, so it's a big sort of ABC all the way up to 38,000 on the Dow, which would be correspondence with the channel line above the last high, and I think it was 2018. Was that 2018? Yeah, it's late 17, 18 there. And obviously with all the margin debt loaded up behind it, who couldn't say it won't get there? So that could be a massive stimulus, trading, and just go to the top of the channel. End our discussion. We'll just have a quick look at the dollar, because the dollar is highly correlated to stocks. So I can find the dollar. It's down here somewhere. This is the DXY for the US dollar. And as you notice here, we're on a breakout of a major trend. Now, we've had a breakout here. We've had a test here. And we most likely might get another test down here. Very similar to, here for example, here's price falling, the first test, the first chest of channel line, there's another one there. And we get strength there. Comes down, bounces, has another test there. So I think we're going to get the third one down there just like it has in its previous history, and then we'll see some strength like what come in here. Alright? That was strength. That was strength. Boom, boom. I'll do that better like that. It's easier, isn't it? Okay. So from here we'll get the strength. So we get the first bounce, 1, 2, 3, I don't know, 1, 2, and 1, 2. How's that? But after the bottom's out around 85, we'll get an awakening to the economy that no matter how much money you print, we'll probably find out that businesses aren't doing well, and it's insolvency risk and the sovereign bond risk starts moving to the front of the page, and it'll have a reason for a US dollar rally, and the long delayed ending to the business cycle might show itself for a period of time. So in the short term, to see the cycle top in the Dow, the stimulus probably come from the lower of the US dollar, and also what little stimulus comes out of the Senate and Congress. But after that, I think 2021 or the last 6 months and the early part of 2022 could be very, very interesting, because the US dollar strength, the US dollar's weakness may be done, and buyers would come in there, and obviously the euro would be too strong, and that'll be very, very interesting. Thanks for watching.